Okay, why change the tax system is a question I am frequently asked, and they usually follow that particular comment with, the income tax system's been working okay. And I'm thinking, really? Where have you been? And then I've come to realize that many people have just had no interest in the past and do not have any understanding of how the income tax works and the albatross that it's been on us and on our economy. But Congress works under the golden rule, and the golden rule is simply whoever has the gold makes the rules. Well, in this case, Congress has the money, and whoever controls the money controls us. That being said, what we're saying is that how much longer are we going to let the rodents in Washington control our lives? And income tax has proven to be an impediment to job and economic growth, and we've seen that, and it's caused a slow economy and more frugal lifestyle. I don't know how many of you out there are living a better lifestyle now than you were, say, 8, 10, or 15 years ago, but many are not, and that obviously has to change. And the income tax system has deprived us of freedoms given us by God, confirmed by our founders in our Constitution. All right, there was $20 million of research done that ultimately resulted in the FAIRtax legislation being written. That research was spent on a marketing organization who did telephone surveys and physical workshops with people like you and I. And through that work, the conclusion was, or the desire was, that the best tax system for us would be a national retail sales tax. Why? Two reasons. One is that it's the easiest and least expensive to administer and enforce. And the second reason is that it is the least intrusive on our privacy. So that being the case, the information was turned over to some professional legislation writers, and the FAIRtax was created. The FAIRtax is a national retail sales tax on new goods and services only, new being circled and highlighted here to emphasize new. That means that there is no sales tax on items previously taxed. Said differently, there is no tax on used goods. So if you want to buy a car that's been used, no sales tax. You want to go out and get that new Corvette, go get it. You like to fly, get the Cessna Citation, go get it. Or if you're more of a water person, get the boat or the yacht you'd like. No sales tax, okay? Education is the second thing that is not taxed, and those are the only exemptions, education and used goods. And the reason education is not taxed is because capital investment is not taxed. The FAIRtax has abolished all of the federal income tax code, and it has abolished the IRS. It is, in fact, the only tax proposal that totally legally abolishes the entire IRS. Okay, and so education is considered an investment of human capital because you're getting educated in order to improve your ability to earn income, and so that will not be taxed. The effective tax rate for most people will be between 0 and 11.5%. Simple enough, and that means that we all take home a full paycheck without any federal tax deductions. H.R. 25 is the legislation number in the House of Representatives, S-155 in the Senate. The Senate's bill number will change every session, so in 2017, when the 115th Senate convenes and the FAIRtax is submitted, it will get a new number. But H.R. 25 should remain the same in the House of Representatives. So also, the FAIRtax legislation worked under the guidelines that there would be equal treatment for everybody. No special favoritism depending on your station on life or who you know, whatever the case might be. Everyone is treated exactly the same under the FAIRtax law. Today's prices, oh my gosh, today we're paying 20 to 25% more for everything we buy because of the embedded taxes. That's taxes and compliance costs are in there. Now we don't talk much about the compliance costs. We can't calculate them very well. They were not included in the research that found that 20 to 25% increase was just because of taxes. So we'll ignore the compliance costs for tonight. So we're paying a sales tax now. Most people are not aware of it. It's buried in the price at the cash register. And remember, as we go through this presentation tonight, and as you get to talking about the fair tax to other people, when they have an objection to something that the fair tax is doing, they're not happy with when it comes to what is and is not taxed. Under the fair tax, embedded taxes are vanished. Okay? Also, there are no exemptions. We talked about that. And that just means that everybody is treated equally once again. Now, people still ask, well, why? Why not exempt, for example, food and clothing? Well, I'm going to give you an example, and we're going to take a pair of jeans. Those jeans, we might go out and pay $40 for them. If there was a 10% sales tax, we'd save 10 bucks. A wealthy person would go out, buy a pair of designer jeans, pay $100 or $150 for them. They'd save $10 or $15 under a 10% sales tax. So you see how exemptions benefit the wealthy dollar-wise much more than it does the lower income people. So no exemptions, and that helps maintain the unequal treatment under the tax law. The tax rate under the fair tax is 23 cents out of each dollar. That's 23% inclusive, or 30% if you calculate it as an exclusive tax. Either way, it's 23 cents out of the dollar. And when you go to the store and you see the loaf of bread for $3, that includes the sales tax, okay? That does not get added at the register. An effective tax rate is calculated simply by dividing the amount of tax paid by the total purchase. And if we look at the left-hand side here, $23 divided by 100, that's 23%. Take that same $23 and divide it by 77, that's without the fair tax added, then it's a 30%. But either way, it's still 23 cents out of the dollar. Okay, and most people, as I said, will pay 0 to about 11.5% over the year. The tax family consumption allowance, tax prebate, it's paid in advance only to qualified people. How do you qualify? Well, geez, it's going to be tough. However, you must have a legitimate residence in this country and a valid Social Security account. If you live elsewhere, your Social Security account doesn't matter. You do not get the family consumption allowance. Illegals will not qualify for this. That's why they're illegal, and therefore their cost of living will go up considerably. Many of them may deport themselves, and they will no longer be a drain on our hospitals and schools. Regarding exports and imports, right now the United States is at a disadvantage of between 17 and 18% because of the embedded taxes that are in the costs of everything they ship out of the country. Okay. Under the fair tax, there are no embedded taxes, very little in the way of compliance costs, and so our prices that we export will be much lower than today, and the demand for made in America products will increase dramatically. It's going to increase the demand for businesses to produce more of their product, which means they're going to need to add some jobs. And that's a good thing, because adding jobs means there's going to be people working and off the unemployment rolls, and it means there's going to be people consuming more, which is good for the entire economy. Imports, they will be taxed at the fair tax retail price of 23 cents out of the dollar. So that's on a level playing field with our domestic products. Remember corporate inversions and Burger King? My, what a hullabaloo that was. And there was so much consternation over the fact that Burger King was going to move from the United States to Canada. Well, they did that because they're looking out for their shareholders, and they had to go where they would save millions and millions of dollars each year on taxes alone. That's a pretty good deal for them and their shareholders. And you know what? When a company is more profitable, that also benefits all of us that have retirement plans, pension plans, and IRAs, or stock, or Roths. It doesn't matter what it is, but there's a good chance that Burger King and many, many other corporations are part of our mutual funds portfolios. So it's good for us too. Anyway, under the fair tax, they stop corporate inversions cold. Consider there's no corporate tax, no profits tax. Why would anybody want to leave this environment? In fact, we'll create a vacuum for jobs from other companies from other countries, and they'll come in here to take advantage of our tax system. One concern we all have, those of us that are fully aware of the tax system, the fair tax system, is that some other country might implement it first and become the tax business haven, financial investment haven of the world, and suck all of that business and investment dollars to them. That's why we have to get the fair tax passed. Okay, so the prebate pays the fair tax amount on the essentials up to the poverty line. Low-income people have no tax liability up to the poverty level for their tax, for their family size. And they can also buy used and pay no taxes. So this family consumption allowance is a good deal for us. The prebate dollar amount received is additional money. They can save it or spend it. And if they spend it, that's okay. That's $5,465 more for the year that they can spend. But think of that as being a savings. Now a couple will be spending, if a couple is spending $23,760, that's their poverty level for their income, for their consumption. It is also every penny they earn. And if you could think of it, $5,400 is a pretty good savings for the year. Now here is the family consumption allowance table, and if you look at the yellow portion on the right, the yellow highlighted portion, you see where the couple is getting $23.60, and that's their threshold. If they spend more than that, then they start contributing to the revenue for the federal government. They become a couple with skin in our game. They are contributing to our system. Although their tax rate will still be low, in the 1%, 2%, 3% rate, they have to spend twice that much money to get to 11.5%. And the green line is a couple with 2 children, and you see they get $614 a month for that. The left-hand side, of course, is for a single adult. I'm going a little quickly now because of the time lost. And if you'd like a copy of this chart, email me at repeal_16@earthlink.net. I'll be happy to send it to you. So how does the fair tax affect retired people? Well, if you consider that many retired people are at the poverty level, and they have all of the benefits we saw for low income. They're receiving Social Security. Many have pre-tax retirement plans, and we're going to pay income tax when distributions are taken. Well, holy smoke, they're not going to have to pay on those distributions any longer. If they have a Roth IRA, which is funded with taxed income, now that just puts them in a little different category, and we'll talk about that in a moment. But how does it really affect retired people? What are their benefits under the fair tax? They receive the prebate. If they're working, which many are, there are no deductions from their payroll, no federal deductions from their paycheck. There's no tax on their Social Security any longer. They can buy used and not pay any tax. And the big windfall, of course, is their pre-tax retirement distributions are not taxed now. That's a windfall for them. But some will whine, oh, I paid tax once into Social Security and Medicare. I wasn't supposed to have to pay it again when I retired, but now you're charging me. Well, they forget. They are paying 20 to 25% tax now and don't realize it. Retirement pension income is really not taxed under the fair tax. Low-income people fare very well from the fair tax, and retired people fare even better because their COLA adjustment, that's cost of living adjustment, their formula for that is modified to calculate any increase in taxes that take place in the future as the result of inflated prices. So retired people are immune from paying taxes on the cost of anything they buy after the fair tax is implemented. So you see, it really is good for everyone. No one files a federal tax return, and not even businesses. The fair tax will be administered and enforced by the states, and that takes the federal government out of our faces. We don't have to deal with them any longer. 45 states have a sales tax department now, and so they know how to do this thing. For those states that do not, if they choose not to have their own sales tax administration department, they can contract to another state or the federal government to do it for them. Administration of the prebate will be done by the states. They will process the applications that are submitted from the families and verify the information, which is name, residence, and social security numbers of every person in their family unit. Then they'll, if that's okay, the state will pass that on to the Social Security Administration, and they will process sending those family consumption allowance checks to the primary resident in that household. The prebates do have to be renewed once a year on a calendar year from when it was first submitted. Also, it has to be submitted if there's a change to the family structure, a birth, a death, or whatever the case might be. States and businesses, they will get 1%, 1/4% of the tax that they collect as a fee for administering and enforcing the fair tax. So they get reimbursed for their effort. Frequent questions. Would it be easier to pass a flat tax? Heck yes! And you know what? That is exactly what our Congress wants. They don't want to get rid of an income tax. And every flat tax proposal is a tax on income administered by the IRS and requiring the 16th Amendment. And once again, the fair tax abolishes the tax code, the IRS, and with sister legislation starts the repeal of the 16th Amendment. An income tax or a VAT of any kind is ripe for change. How long do you think a flat tax will stay flat? And if you consider the 1986 Tax Reform Act, where it changed 7 brackets to 2, there's been over 14,000 changes to that since then, and we have, I think it is 6 tax brackets today. A flat tax would be like that in no time flat. No pun intended. Who opposes the fair tax? Anyone whose income is primarily derived from the current tax code. That would be lobbyists. They get paid big bucks for getting tax benefits created via legislation by influencing congressmen and senators to pass and support and pass that legislation. Politicians are opposed to the fair tax. Why? Because they get from the lobbyists, they get some donations, if you will, contributions for their re-election campaigns, as well as other perks that we don't know about. And this is all done in a legal manner, but just the fact that it's done is not, at least in my opinion, really moral. It is not ethical. IRS workers, they are opposed. Why not? Well, because they see their jobs going away. And I understand that. They're right. Some of them will find other jobs within the federal government. Others will have to get out into the real workforce. And some accountants whose income is primarily derived from doing tax returns, they could be opposed to this, although I've talked to tax accountants and tax preparers. In other words, that's all they do. And they are happy to see the fair tax come into play because they've seen how their clients cheat, and they can't do anything about it. They have to take the numbers, the information that is provided by the client, and just put it into the right boxes on the tax return. So just imagine now, never filing a federal income tax return again, not fearing an IRS, enjoying freedoms and privacy lost. What can you do to help? Well, golly, folks, you have to just get serious about advocating for this idea. Go to FAIRtax.org. That's the home for Americans for Fair Taxation. And the research papers that are there, plus many other great documents. Register there so you can be counted as a supporter. FloridaFairtax.org is the home page for those of us who live in Florida. And for Facebook for Americans for Fair Taxation, facebook.com/fairtax. And similar for Florida, Florida Fair Tax. And you can go to Twitter and deal with Americans for Fair Taxation there on their official Twitter page and get their bulletins as they come out, their little notices, and make your comments and observations. Also, go to America's Big Solution. Now this is new and it is not totally 100% functional, but it's probably about 98, 97, 98% functional. But bigsolution.org, you can go there and build your own FAIRtax supporter empire. Man, it's tremendous. Go to Connect to sign up for yourself, register for yourself, and if you register there, it's the same as registering on Americans for Fair Taxation. It will match the data, and if everything is the same, our duplicate record will not be established. And but this lets them know that you're alive and you're not dead weight coming from the old FAIRtax database, okay? And you can go to the build function and add some of your friends, neighbors, and relatives after you've advised them that you'd like to do that. And so I would suggest you talk to them about the FAIRtax first and find out that they are interested in learning more, and tell them you're going to register them to get some information, and tell them how to go to the website and encourage them to learn more on their own, and to invite their friends, neighbors, and relatives to learn about the FAIRtax and join also. You can help them do that and build your FAIRtax team. And this is what the Big Solutions page would look like on the build sheet. If you go to, you see the second line on the top there is the Connect. That's where you go to register, and then you go to Build to start adding people to your team. So that's kind of neat. All right, and a shameless plug for our friends Ron Malero on the left and Bob Paxton on the right. Bob is a professional broadcaster, and Ron is a professional FAIRtax advocate. And they've teamed up to do a web blog about the FAIRtax, and they've done many sessions, and you can listen to them and watch a couple, I guess, at YouTube. Go to YouTube or iTunes. Go to YouTube or iTunes and search for FAIRtax guys, and their products will come up. And if you're in the mood for something a little bit lighter while you're there, I'll look for the broadcast You Might Be a FAIRtax Fan. That's a Jeff Foxworthy type of a broadcast, and you'll get a little chuckle out of that. All right, let's see if we can get some questions in here. I do see some questions raised, and I do apologize for this big delay. We should be finishing up now. We're just 3/4 of the way through the program. So let's see where we're going here now. I'm going to bring up the question box, and all of those who said there's no sound, I am going to immediately close you guys out of here. No. Much better, somebody says. Thank you, Robert. Okay, and I'm going to close that, and let's go to the first question from Daryl. Hey, Daryl, thanks for hanging on there, buddy. The question or the comment, the point of used products not being taxable will ensure that new durable goods made in the USA markets will be made better, longer lasting, etc. That is a very good observation, Robert, and thank you for bringing that up, and you're absolutely right. Some people have offered that if used homes are not going to be taxed, it's going to really put a wrench on the new home market. And my feeling there, my expression there is that, no, I don't think it will do that at all. It will mean they are competitive, of course, but I think the new market sellers will find ways to make their places more desirable. Something like putting in, including a free large screen TV, or having the home totally wired for high-speed internet, things of that nature. But they'll find some ways to make that home more desirable than one that is used. Okay, thanks for that, Robert. Next, Daryl is saying, Daryl, again, also consider embedded value of the underlying resources going into manufacturing of durable goods will ensure that a best use first mentality should naturally occur. This might partially satiate those who, on the left, that constantly call for cap and trade. Okay, that's a possibility. I've never thought of it in those terms, Daryl, but that's a good thought, and I'm glad that these questions are recorded so I can save that one later. And progress, but the voice says the webinar has begun, will begin shortly. All right, bye. Ron is saying, I logged in. Okay, we're going to get rid of you. Daryl again. Okay, Daryl. Boy, you're hot tonight, my friend. Fuel being an ingredient, will industry self-regulate its use? There's no reason to understand they would do that. We do know, we have theorized that since a person in business with their appropriate sales tax exemption certificate would not be required to pay the sales tax on fuel, that that customer who has that business, they will either take a credit from a sales tax that they are going to be submitting to the state, and if they're a business that does not sell at retail, then they would just submit a claim for reimbursement and get it that way. I don't know why there would be any self-regulation for its use. I think competition will do that. And the way we're going, we're going to be producing more fuel than we import anyway. Is there an upside to having corporations on an income tax, flat tax or otherwise? Heck no, because that means that those taxes that they are getting, especially an income tax, and a flat tax is an income tax, are going to be embedded in the price of the goods through the supply chain. And you'll see that in some detail when I get into the special topic. Robert is saying, thank you. Okay, Robert. Another Robert. Roth IRA impact? No impact on the Roth IRA itself. That particular form of investment being funded with pre-tax dollars, it was designed so that when distributions are taken, there would be no tax assessed on the gains for it. But there's no capital gains under the fair tax, so that's a wash there. The only gripe that people have had, or the only complaint, if you will, is that some say that some are opposed to contributing again to the federal tax system, which they would do when they buy stuff above the poverty lines for their family size. All right, and Scott is saying, how does the fair tax affect the current taxes that go towards our state infrastructure? Those are not taxes that go directly to the infrastructure. Now, if you're thinking about the state sales tax, it has no effect whatsoever on state sales tax. This is a tax which is challenging and abolishing the federal tax system only. Okay, so state taxes are not involved whatsoever, other than the fact that many states may modify their existing tax system. For example, in Florida, they could find using the model of the fair tax instead of assessing a property tax. Other states could do the same thing with their income tax. They could reduce or eliminate their income tax by assessing a sales tax or a little greater sales tax over a broader base. The broader base is the key there, because then the whole tax level comes down. I remember when Marco Rubio tried to get a fair tax type program implemented here in exchange for property taxes. And the research that was done indicated that the sales tax rate would actually come down from the state tax rate of 6% to about 3%, because they were going to take a broader base with a very few, if any, deductions. I don't remember the exact detail, but he got washed out on that because he didn't allow for the prebate, which takes away the regressiveness. Poor Marco, he just can't win. How does the fair tax? Okay, so it doesn't affect the infrastructure whatsoever. Well, they would have to add some people if they're going to be collecting the fair tax, and you know, that being the case, then there will be a slight increase in the size of our state governments, but that would be fairly minor compared to the size of the IRS, which is over 100,000 employees and in the area of 10 to 12 million dollars a year. I think it's million, maybe it's billion. I don't remember now. All right, let's move on so that we don't hold you guys up too long here. Appreciate you hanging out. Why let's talk about the embedded taxes. Now, you have seen this table before, or this slide before, and I'm just bringing it up to remind you that right now, under the income tax system, 20 to 25% of the price of the goods we buy is included because of the embedded taxes. So that tax goes away it's hidden in the price of everything we buy, and it will go away under the fair tax. Now let's look at an example of a small business or any corporation. Okay, the employer deducts the federal withholding tax from every employee, plus 6.2% for Social Security and 1.45% for Medicare. That's a total of 7.65% in addition to the federal withholding tax, which could be added by 10%, 15, or all the way up to 28%. If the employer also has to add an additional 7.65% to what you contribute as their, and I say this tongue-in-cheek, voluntary contribution to your retirement program. Okay, voluntary, my foot. But those two 765s amount to 15.3%. A small business owner, he has to pay for himself both halves of that, 7.65% to himself as an employee, plus 7.65% to his fund as his employer. So he gets 15.3% taken out of his income, no matter how you look at it. Now, this is only his payroll taxes, the 15.3%. The withholding taxes is in addition to this. So let's move on and remember that the withholding taxes range from 10% to like 28%, and we saw the payroll taxes are 7.65% for each the employer and the employee. Now, he's also paying his business tax on profits. So the individual income tax rates for these profits are 10% to 39.6%. Now that's for his business. Okay, and for corporate tax, that's 15% to 35%. So you can see that they can pay a lot of their income, a lot of their hard work, blood, sweat, and tears goes into paying taxes to the federal government for being successful. The fair tax takes care of that. So a business must recoup these tax costs, plus their regular overhead expenses that we saw, plus add a profit margin for themselves. If they can't do that, they'll go out of business. They have got to make a profit to stay in business. And I think each of you understand that. Okay? So how do we get these taxes embedded into what we pay for stuff? Now we're talking about the company having to have a happy team. They get an accountant or a tax attorney to teach his people how to do the appropriate accounting and recording of this information on their taxes, as well as their compliance costs. Okay? Now, if you're just an individual, sole proprietorship, you don't have a team, a happy team. It's you and maybe your wife or spouse and your tax accountant, and he'll try to educate you on how to take care of this. So let's take a look at what really happens. You take all of that good information, that knowledge, and you put it together. Now you've got your product ready. You've added the taxes and the other stuff and your profit margin, and you sell your stuff to somebody. You're filling an order. And what you do is you ship that order to somebody. And that shipping company adds their taxes and other stuff to the costs of their overhead. And then they provide that product to company number 2. Company number 2 adds taxes and their other stuff to the product they are making, which includes those costs from number 1 and number 2, and they ship it to company number 3 after adding their taxes and other stuff. Now company 3 ultimately gets this product, and they add their taxes and their other stuff. You see the pattern here, folks? You see the domino effect, the compounding? And they eventually ship their product to fill an order to company number 4 after adding their taxes and other stuff. And company number 4 does the same thing. And they eventually ship their product to company number 5 after adding their taxes and other stuff. And company 5 eventually gets their product and they dust it off, put it on the shelf, and they send it to you after adding their taxes and other costs and the FAIRtax, who sells it to you at the price that includes taxes and the other stuff from every business in the chain. And that's the embedded tax story, except it's got to go just a little bit deeper. There's something missing from here. Consider this. Company number 1, what do they do? Well, it doesn't matter what they do. They buy supplies, they buy tools, they may buy machinery or computers or stuff from other people, don't they? Companies A, B, and C, and who knows how many others, who add their taxes and other stuff to the price they sell it to company number 1. So that's all part of, that goes into the cost of company number 1's materials. So that's all part of the cost of them doing business. And you see the same thing happening for every company in the entire system. That is a very, very complex mess, okay? What do? Well, we get rid of the income tax system and all of this malarkey, and we go with a national sales tax where there is only one single point of collection, the point of sale to the end retail consumer. Bingo, it's all done. And now I can see some of you guys out there, holy smoke, what did he say? Well, that's what we're here to the last question and answer period for. And we'll see if there are any more questions. And I do see a hand raised, so I'm going to pick that up first. Mr. Dave, you are unmuted. Let's see if we can hear you. Dave, did you click the hand by mistake? I'll bet that's what he did. He got so excited about hearing something, he clicked the wrong icon. All right, we'll mute him again and see what else we've got going on here. Bum, 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 bum. No more questions. That says one of 3 things. Everybody's questions were all answered, or they're so confused they don't know what to ask, or they've all gone away and I'm here talking to myself. In any event, thank you so much, everyone. I still see a bunch of people listed here, so there is obviously somebody still listening. Thank you very much, and we will talk to you later. Now, I'm going to leave up one more slide. I'm going to leave up the slide that shows the websites for the various people we talked about earlier. I'll leave that up there for about 5 minutes after I've stopped recording, which is now.